Alright, what up man? Profit Gang, you already know what it is. So I'm back again with another video. In today's video, I'm looking at right now very interesting price action on BTC, and I just wanted to give you guys an updated top-down look on BTC, and yeah, let's just see how that goes. It's been a while since I talked about BTC. I think it's about the past two videos I talked about BTC. And even in the last video, I wanted to talk about Bitcoin in the last video that I did, but I really didn't want to make the video too long, so I had to end the video. I was talking about GBP USD in that video. Yeah, so now I just wanted to give you guys a dedicated video on Bitcoin based on the price action that I'm seeing right now, guys. The price action on Bitcoin currently is very interesting. It's something that you guys can learn a lot from. I'm gonna come at the price action in so many different angles: trend line, Fibonacci, market structure, and things of that nature. Hopefully, I'm gonna do justice to bringing together all of these concepts, making everybody understand the market in the way they understand the market, because the way that I teach is wholesome. Okay, everybody is inclusive basically. All right, everybody can actually understand. So I'm gonna come at this with different approaches and different concepts, and at the end of the day, of course, I'm gonna blend it all using market structure and show you guys the levels where I feel like there's gonna be reactions and or reversals from. So again, it's gonna be a fun time. Let's get into the market, man. Let's go. All right, so the price action on BTC is looking very good right now. So I just wanted to come in and give my 2 cents about what I think might be, some possibilities that we can expect on BTC price action. This is on the 4 hour time frame. Obviously, I'm gonna go back to the daily time frame. Like I said, I'm gonna come at this from different angles. So the first angle I'm gonna come at this from is from the angle of trend lines. Okay, so for people who trade trend lines, of course, your trend line is basically supporting the trend. The trend line is acting as though it's a support level for the trend, right? So if the market is bullish, right, we're creating higher highs, higher lows, higher highs, higher lows, and then higher highs. Your trend line is basically acting as a support level, okay? And you're expecting the market to react off of the trend line for you to take a trade off of the trend line, okay? So you're expecting a pullback into this level, maybe like the break and retest level. Of course, it depends on how the market pulls back, okay? It can be more so like this, where it's not necessarily hitting the break and retest level, it's more or less hitting the trend line, or it could be more spread out like this, where it's hitting the trend line and the break and retest level at the same time. Okay. I mean, one candle can bring the market all the way down here. Okay. And sometimes the market can range for a bit, and at the end of the day, it finds itself down here. So it's reacting off of the trend line and it's continuing to the upside. At least this is what trend line traders expect to see in the market. Now, going off of the concept of trend lines, obviously we can see that this market has been trending to the upside. If we can see, we have these highs and lows. So we have high, we have low, we have high, we have low, we have high. And if you kind of like zoom out a little bit and apply your trend line, let's say from all the way down here, we can see something that looks like this. And again, this is one of the problems with trend lines, because it's kind of like it's very subjective. Okay, it's very subjective. You see? So we're touching this, kind of miss this. I mean, a trend line play could work out here because obviously we're in an uptrend, and that can definitely be your trend line. Okay. Now, for people who have a little bit more understanding of the market, who understand market structure to some extent, enough to understand Fibonacci concept, if you look at what's going on here, we have this low here, created this high, and this here is the most recent push to the upside. We're expecting something like this and back to the upside. Obviously, the range of price we are within is this lows here to these highs. So if you're going to apply your fib, you have to apply your fib from this low all the way to this high. And you can see right now we're currently within the Fibonacci level. Okay, we're within the Fibonacci level on the daily time frame, meaning that we can expect a reaction off of this level. Clearly, we can see how the market has printed a rejection candle for people who understand candlesticks formation. You can see how the market formed a rejection candle as soon as it got into the 62% level of the Fibonacci, which is essentially a demand level. Of course, we can see there's a huge fair value gap or there's a huge imbalance. The market is kind of like filling up this imbalance or reacting off of that imbalance. Okay. So while the trend line traders are also looking to take a buy off of this area here based on, a pre-existing trend line. I'm not really a trend line trader, so forgive me if I'm not drawing my trend line the way, a trend line trader would. But like at this point in time, if I have a trend line here, like I said, it's very subjective. A lot of the times people just make it work. So you can see how, we have one touch of trend line, two touch of trend line, and a trend line trader wants to see at least rejection of the trend line, maybe even candle close above the trend line. That will be their confirmation for a buy. Meanwhile, a Fibonacci trader might want to also see rejection candles off of the Fibonacci level, right? Maybe they want to see the market create, after rejecting this, they want to see the market create an engulfing candle and a candle that closes above the previous candle, and that could be their confirmation for a buy too as well. Okay, this is for a trendline trader and the Fibonacci trader. Okay, but then again, that's not how I analyze the market. I just had to show you guys that, of course, I understand different ways of looking at the market, but the only thing I like to rely on when I'm analyzing the market is the structure of the market. Is the structure of the market. And that means the internal structure, the external structure. Okay, identifying the structure points on the internal structure to get my internal zones, identifying the structure points on the external structure to get my external zones. Now, when I see internal and external zones overlapping each other, then I know that's a very important level for me to be looking at. When I see higher time frame zones, right, overlapping lower time frame zones, I'm interested in that particular level. Okay. So the way I look at the markets, according to my own school of thought or my own way of analyzing the market, is not from a Fibonacci perspective, although sometimes I rely on the Fibonacci for confluence. Okay. I rely on the Fibonacci for confluence, but the way I'm looking at the market, I'm not looking at the market from the standpoint of the Fibonacci. I'm looking at the market from the standpoint of market structure. And that's one thing I want you guys to know for a fact. Okay. So what I'm saying is I basically trust the structure of the market more than I trust the Fibonacci level. I trust market structure more than I trust um, trend lines. I trust market structure more than I trust, the RSI tool. A lot of people don't know about the RSI tool. But yeah, the relative strength index tool, talking about the overbought and the oversold levels. Even the Bollinger Band, a lot of these concepts, trust me, if you know exactly what you're looking at in the market, they all work, especially when you pair it up with market structure. All right. But my first point of analysis is always through structure because the market structure shows me the true facts of the market. Okay. There are certain levels in the market where we can all agree that, man, this is the higher high. That's market structure for you. When it comes to trend lines, you might say, okay, I don't want to touch this low with the trend line. I don't want to touch this low with the trend line. I want to adjust my trend line a little bit so it looks more, aesthetically pleasing to the eyes. Whereas somebody might draw their own trend line in a different way. That's why I said trend lines are subjective, right? When it comes to the RSI tool, a lot of people use 80-20. Some people use 70-30 for the overbought and the oversold. Some people use 75-25. You know, there's a way people tend to like tweak their numbers and things of that nature, right? And it makes it subjective. But when it comes to the structure of the market, we can all agree unanimously that a higher high is a higher high and a higher low is a higher low, right? We can all agree that this is a bullish market based off of like the characteristic of that market, especially when the market is breaking structure consecutively to the upside. We can all agree that this is a bearish market when this market is consecutively creating lower lows. Okay, so you get where you understand where I'm going with this, right? I'm trying to say that the only way for us to get factual information from the market is by observing the structure of the market. Now, how do we observe the structure of the market? This is where perspective matter. Okay, this is where perspective comes into the picture. Now, what is perspective? Perspective, simply put, is where exactly are you looking from? Okay, where exactly are you looking from? In market terminologies, what time frame are you looking from? And of course, are you looking at the macro structure or are you looking at the micro structure? Or are you looking at the major structure or the minor structure? Are you looking at the external structure or the internal structure? So a lot of these things are things that you would have to consider um, to understand market structure deeply. Okay, so this is what I'm looking at here. On the daily time frame, I'm looking at the macro structure, the major structure. Okay, now on the major structure, I can just barely see, the market has been in a massive uptrend. We have this major push to the upside. We have a pullback, although this looks as though the market was ranging at the time. Then we had a continuation to the upside. Notice how the market is breaking to the upside. So of course, we are in a bullish market, right? We had this high, the market pulled back down a little bit. Again, notice how the market reacted from kind of like a break and retest level around there. Notice how the market is kind of reacting from a break and retest level around there. Now we are seeing continuation to the upside. Okay, we're seeing continuation to the upside, still taking out market structure to the upside. So we're definitely still in a bullish market. Now, this is the origin of the most recent break of structure, which is this. Remember, I'm still looking from a macro perspective, right? This is a higher high. And of course, we are expecting something that looks like this, a pullback into a certain level for a continuation to the upside, since we can all agree that this looks as though we are in a bearish market. Okay, now mind you, it's very possible for the market, even on a macro perspective like this, to change character. Okay, it's very possible for the market to change character even on a macro perspective like this, meaning that we can probably see Bitcoin back at 65K level. We have demand levels around that area that are still very much valid. And of course, we even have more demand levels lower. So it's not a question of, is it possible for the market to break and, now start selling to the downside? Yes, it's very, very possible. That will be a change of character and a reversal to the downside. Okay. But if the market is going to change character, then it must interact with these demand levels here. Now, this is the origin of that break of structure. So therefore, some demand levels must come from this area here. So we're going to have some sort of demand levels around that area there. Okay. So when the market is pulling back, especially when the market has already taken out the break and retest level, you can see how the market, let me zoom in a little bit. Look at how the market interacted with the break and retest level, right? There was a rejection of the break and retest level. The market tried to go higher, only for it to come down, change character around here, and started a downtrend. Okay. Now, where is he heading to? Somewhere such as this. Maybe we start to see a pushback to the upside, maybe, or it could be that, the market can, after all of this, continue to the downside and go even lower, right? The analysis is getting so messy right now, but I want to believe that you guys are understanding the analysis, okay? So I'm going to go back and I'm going to make this more beautiful, for lack of better words. So where I'm looking at currently is the most recent leg of price, which is from this low all the way to this high. Externally, that's our push. Of course, you can see the internal structures around that area there, around this leg here. Now, how do I know that this is a valid leg? The leg reversed back to the upside. Okay, so a downtrend, we have low, high, low, high, low. Then we have change of character. Now, at the time we had this change of character, notice how the market never came back to these levels to mitigate before the continuation to the upside. Now, the market pushed all the way to the upside without ever coming back to these levels here. This is the reason why these levels are now valid demand levels, because these are now unmitigated demand levels. So when price is pulling back, these are the levels that we're expecting price to pull back to. Okay. To make this more understandable, looking in from the internal market structure, that's why we have multiple demand levels. Okay. Because looking in, oh, come on, man. Looking in from the internal structure now, we have low, we have high, we have low, okay? We have high. Notice how the market has mitigated the first order block here. We have a break of structure to the upside here. The market pulls back. It fails to mitigate this order block or this demand level. Okay, it fails to mitigate this demand level. Then we have a massive push to the upside, gave us this high. Now notice how the market is breaking both internal structure levels here. That's the internal break of structure and external break of structure around here, making this level a valid demand level. And you can see how the market never really came back. Okay, there was an attempt to come back, but it failed, and the market continued to the upside. So therefore, liquidity is resting underneath that level there. Look at what we're having, guys. The market has swept that liquidity. Okay, the market has taken that liquidity. Now, I'm not necessarily a liquidity trader, but I understand the concept of liquidity and I observe the concept of liquidity. A lot of people were looking to take a trade off of this level here, and you can see how their stop losses have been taken, right? Because the market is coming to the true demand levels. Okay, so here we have a breaker level based on this level is the level of the change of character. So this is CHOCH. So that's where the change of character occurred. That level essentially was flipped from a resistance level to a support level, right? And that's why it's called the breaker level. Okay, the breaker point or the breaker level or the flip zone, whatever you choose to call it, right? But still, that's not the true demand. The true demand is down here around $86,000. Now, is it possible for the market to react off of this breaker level and give a change of character back to the upside and start buying? Definitely 100%. In fact, when you go to the 1 hour time frame now, you can see the markup here on the 1 hour time frame. It's looking as though we've kind of like had a change of character here, more so on the internal structure of the market. Okay. Now, one might want to say this is the last low or this is the last high that's created the last low, but truly is not, because the break of structure is here. So this is the last high. that created this leg. This is only the internal structure of the leg. That's not a true change of character. But is it possible for the market to still have something like this, bounce off of this and push to the upside? 100%. Okay, but I don't really expect that to happen most likely. What I would love to see is for the market to take out the external structure points, right? That would be a more valid change of character for me to expect this to happen. All right. But what am I trying to say? I'm trying to say that there are a lot of possibilities that we can expect. But again, if you are watching from the higher time frame, you can see that even on the 4 hour time frame, we haven't really gotten to the 4 hour order block or the 4 hour demand level. Now, where's that 4 hour demand level coming from? Let's go back. Come on, man. Let's go back here. So look at that. So this is the daily level. We have this 4 hour level aligning with the daily level, just right on top of the daily level. Just right on top of the daily level. I want to remove all of this so, it's not going to be so messy. But remember, let's go back to the daily time frame. Let's just refresh our memory a little bit. So on the daily time frame, come on, man. I'm going to have to remove this so it can be very, very crystal clear. So on the daily time frame, we have this orange line here is the daily breaker level or the daily flip zone where resistance was flipped and now is support. So we can definitely expect the market to react off of this support level, reject it and buy. However, we are looking more into the demand levels here or the order blocks here coming from the internal structure. Now, it doesn't really matter whether it's coming from the internal structure as long as it's coming on from the daily time frame is a valid level. Why? Because the daily time frame is a higher time frame and this is a higher time frame order block or a higher time frame demand level. Okay, so is very, very much valid regardless of the fact that it's internal. And of course, we use internal structure to narrow down our levels anyways to get better risk to reward. So it's very, very valid. Now, since we're expecting it to get into the daily order block, we want to refine the daily order block to the 4 hour time frame. So let's go to the 4 hour time frame. Again, we're going to look into the internal structure on the 4 hour time frame. That's how we refine. That's how we refine. So let's go back in time. So around this area here, we can see what the 4 hour structure is looking like. Okay, so this is the daily order block. We're expecting the market to push lower into the daily order block. But when we come to the 4 hour time frame, we see that according to the 4 hour market structure, we have a 4 hour demand level just above the daily demand. Okay, so if you look very closely, the market kind of ranged for a while. So we have low, high, low, high, low. So you can see the market kind of ranged for a while. Then we had a push out. So there was a break of structure there. The market pulled back. It failed to come back into this demand on the 4 hour. Mind you, this is the same level on the daily time frame. This is the same daily order block. So of course, the range of the order block is wide. So the market can pierce into the order block and get to this level here. However, on the 4 hour time frame, we see there was another break of structure to the upside. And of course, the market never really came back here. So on the 4 hour time frame, this level here is a valid demand level. Now, why are we even considering this level here? Only because it's aligned with this level coming from the daily time frame. Remember, this is the daily flip zone. Okay, so if we can expect the market to buy from the daily flip zone, then of course we can expect the market to react off of the daily flip zone and this level at the same time, meaning that in recent times, we want the market to push further into either one of these levels. Then we can see confirmation, then we can take a buy. Now, if you look very closely, look at the trend coming in on the 4 hour time frame. We are definitely still in a downtrend. The market is creating lower lows. Okay, so of course, we're expecting the market to get to that level there. I'm going to start from here. This is a low. That's a high. That's a break of structure to the downside. pullback, continuation, pullback, reacting from kind of like the break and retest level. Okay. New low created. This could be a pullback that brings the market all the way down here. Maybe we can now have that confirmation to take it all the way back up to the upside. Maybe. But this is what I'm expecting basically. Okay, something that looks like this is what I'm expecting basically. All right. Now, if the market is not going to give me this confirmation, let's say, for example, the market is going to buy based off of the fact that it has reacted from the daily breaker level, then what I want to see is, like I said, I want to see a valid break of structure of the last high that created the last low. So that will be my change of character. So what I'll be expecting on this is maybe I get to see a market that looks like this. Okay, the market pulls back down, maybe into such a level like this. Then it gives me the change of character. Then, of course, I know I'm going to be taking my buy. Come on, man. Don't do that. Don't do that, man. So I'm going to be taking my buy off of this level here. Okay. But I definitely want to see a valid change of character around this area here. This camera has been rolling for a while. All right. So I want to see a valid change of character around that area there. So that will be my confirmation. But for now, I'm basically still expecting the market to at least attempt to get to the 4-hour levels. Okay. Let's see what's going to happen here. All we have to do now is wait for confirmation. So either one of the scenarios that I just talked about plays out, then we're going to have a trade. Okay. But for now, the market is not really telling us where it wants to go. If we're following the downtrend, then of course, we should be looking for a sell of that level on the 4-hour. You can see how the market has already reacted from that level. This can be H4 supply level. Why? We have breaker level there. Okay. We have another H4 level here, supply. Okay. Because of course, this could be liquidity. So the market might want to reach for this, go to the downside, or even reach for this, go to the downside. All we have to do is mark out all of the valid supply levels, basically, since we're in a downtrend. Okay, so now the market is basically trapped between these supply levels and these demand levels here, and it has to go somewhere at the end of the day. So let's see where it's going to go exactly. And yeah, that's my take on BTC. Anyways, on the higher time frame, let's say on the weekly time frame, notice how even on the weekly time frame we're currently at this weekly order block here. So that's the weekly order block from week to week, guys, from week to week. That's how I mark out my order block. Now, that's the first reaction from the order block. Okay. A lot of people like to say, they expect the market to get to at least the open. Okay. So if the market is going to get to the open, that's $82,000. So let's go back to my daily time frame. Do I have markups aligned with that level there? Look at that. That's the open. Okay. That's around 82K. Meaning that the market should even go lower, maybe even take out this level and come to the extreme level. All right, so we're basically expecting the market to react off of this demand, give us confirmation that it wants to go higher. Then we're going to be looking for buy trade opportunities. I'll probably update you guys on the community when these trades are going to drop. If you are not in my Telegram channel, of course, you want to be in the Telegram channel. Okay. So you want to be in the Telegram channel. Um, yeah. You want to be in the Telegram channel. So that's the Telegram channel right there. Okay. You can pause the video, scan the QR code to get straight into the Telegram, or you can just search on Telegram for GPS free signals. Yeah, that's the Telegram channel. So I'll probably update you guys because I'm still watching this. We're waiting for confirmation. We still haven't gotten confirmation yet. But I just wanted to show you guys the levels that I'm looking at, what my markups are looking like, and what I'm basically expecting from price. Looking at BTC current price action. So I hope you guys gain a lot from the video. I hope you guys um, gain something from this video at least. And of course, if you're new here, like the video and subscribe to the channel. A lot more of these videos are going to be coming your way. And yeah, man, that's going to be the video for today. Without further ado, I'll see you guys in another one, man. It's gang gang from me.